And first of all, I want to take it out to you, of course, David, and really ask you, the stock is bouncing. What we've heard from Elon Musk today seems to be that really this is going to be the only capital raise of 2017.
It is, and he's saying that there's an 80% chance that he won't have to go back for more money. That's what one of the tech websites, Electric, reported, and he strongly indicated that. But analysts are skeptical. Yesterday after this, we were still hearing that some think he's going to have to go back and get more money. One possible explanation is that it'll be a soft launch of the Model 3. In other words, later in the year, we won't see a lot of production of the car, so they won't be ramping up quite so rapidly, and they'll really be building production much more quickly next year, and that's when they would need to come back for more money, maybe early in 2018.
Let's get the analyst perspective. Jamie from Consumer Edge Research. Are you convinced that really $1.15 billion is enough? Because they are burning like mad. We just saw almost $1 billion in the fourth quarter alone.
Yeah, and by the way, thanks for having me. I don't think it's enough. I'm surprised it wasn't a bigger transaction. I mean, you sort of strike when the iron's hot, and there's a lot of very positive sentiment among the sort of investment community looking ahead to the Model 3 launch. You know, the other guest here mentioned what his comment was very accurate. We are going to see a continued spend as the Model 3 progresses from sort of an initial soft launch well into 2018 as they try and sort of work their way over the longer term to 500,000 units a year overall. So, you know, just surprised though that they didn't take this opportunity to raise more capital and, you know, put that risk off into the future to have to go back to the market for another secondary offering.
And so, David, there might be potentially a slightly larger than 1.15 billion tapped a little bit in the market, but what else do we think in terms of actually the money that Elon Musk himself is putting behind this deal? Because he's the #1 stockholder in Tesla and he's committing a little bit more.
Sure, he's buying another $25 million worth of stock, which next to his total holding isn't a lot, but that's what Elon does. He borrows money, he secures it against his own shares in the company. He doesn't take a salary, so the money he borrows from his underwriters is essentially what he is kind of living on. And you know, he continues to buy more shares, and he's got a lot of skin in the game, and investors like that. And I think that's something that they've always admired about him. He'll probably need to come back and get more money, though. I think that's sort of the consensus here, and I think investors are prepared for it. And you know, maybe it is just a matter of waiting until the Model 3 cash needs really start to stretch out, and then they have to go back to the market again.
Nevertheless, Jamie, looking at your price target, it's pretty bullish. You think the price could rise yet further. Well, does this mean that there has to be a really smooth process of the Model 3 coming onto market? Or, I mean, have you factored in any other risk factors here?
Look, I think it has to be reasonably smooth. I mean, I don't know that, you know, if it slips from the third quarter into the fourth quarter that it's sort of game over. But I think, you know, they've talked about now the back half of the year, not late 2017. So the implication is that there's going to be some production in the third quarter. You know, investors are polling suppliers right now. They're trying to make sure they're on pace to keep up and keep on track for that third quarter soft launch or otherwise. So yeah, the risk factor is if they don't sort of hit that target, then I think that could be a negative catalyst. And you know, clearly there's going to be more cash burn here, as there always is with a new product launch at any auto manufacturer. So I look at the quarterly results as you know, another opportunity for bears to kind of sink in and say, look at all this cash going out the door. We don't know where it's going. It's more than we thought for the Model 3. And that's where, you know, I think you have to take a more balanced view. They're spending a lot of money on the Model 3, but they're also spending to expand service centers and infrastructure and expand globally. And quite frankly, 10 or 15% of what they're spending is on, you know, projects and products that we haven't even heard about yet, as has been the case historically. So yeah, I think there's probably more negative catalysts around the quarters and definitely around the Model 3 kind of hitting that third quarter target.
But nevertheless, a phenomenal market capitalization still held onto by Tesla, some 42 billion, and somewhere close to even where Ford is. Jamie, I've got to ask you one interesting thing that's come to light is, of course, the day that the capital raise was announced, we had a reeling back potentially from the government of perhaps stricter needs and rules, environmental standards for cars. Right. Does suddenly the incentive to buy electric vehicles diminish a little bit with Donald Trump in charge, or does that really not take away the demand from your side of things?
Yeah, I don't see, I mean, as I've said before, we wrote yesterday, the hay is sort of in the barn. The industry has invested in on electric vehicles. Ultimately, we'll be investing on autonomous vehicles that I think will predominantly be electric powered. And we are building infrastructure. Consumers are now warming up to the fact that they have 200 plus miles of range for a much more reasonable entry price. Residuals are holding up. The technology's holding up and proving out to be a lot lower maintenance in terms of costs of maintenance over time relative to gasoline-propelled vehicles. I don't see this working backwards. And then auto manufacturers, by the way, they look at sort of decade-long views when they think about investment strategies. So at the very least, there could be a big inflection in political will 8 years from now, if not 4 years from now. So I just don't see demand sort of falling off here. I think we've got good products out there, good products coming, and I think that's going to keep propelling the EV along from here.